Hello, and thank you for tuning in again. Today I wanted to quickly recap some of the recently introduced measures around COVID-19 and how that may impact tax time and going into next financial year as well. So firstly, if you are one of many of us that have been working from home over the last few months, then the ATO has introduced a simplified way of claiming some of those home expenses for you. So the way you can do this is by claiming 80 cents for every hour worked at home. So it's a really simple way of claiming back some of those expenses. Of course, the traditional methods of claiming home office and working expenses are still available. So it may be worthwhile talking to your accountant to work out which method works out best for you. Secondly, if you've managed to make some personal contributions to super this financial year, then please remember you need to lodge a form with your super fund, notifying them of your intention to claim. Your super fund then needs to acknowledge that with a letter of acknowledgement, and that letter of acknowledgement needs to be provided to your accountant to claim that in your tax return. So there's a bit of a process to follow there. I can help you with that if you are unsure, and so please feel free to reach out, but remember to do it. And of course, we've got some life insurance premiums that are tax deductible. For example, income protection premiums, when paid for outside of super, are tax deductible in your tax return. So be sure to check that. If you're not sure, again, get in touch and I can talk you through it. Okay, so let's now consider some of those COVID-19 measures that will flow into the next financial year and how it may impact you. Firstly, of course, if you're eligible, we've got those JobKeeper and JobSeeker payments continuing for the time being. How long will it continue? I'm not too sure. I think September is the word at the moment, but it's under constant review. So we'll have to watch this space. Of course, if you're in pension mode, if you're drawing an income from your superannuation, then the minimum pension rate has been reduced by 50%. And that will continue for the next 2021 financial year. So that means you can draw, if you're 65 to 75, you only need to draw 2.5% of your balance as opposed to the standard rate of 5%. And that helps to preserve your superannuation balance and really ride out that recovery of the financial markets over time. Now, for those eligible for age pension or some other kind of social security benefit, but you haven't received any JobKeeper or JobSeeker payments, you will be eligible for a second $750 payment, which will be paid automatically from the 13th of July. And then lastly, of course, there's that second opportunity to access another $10,000 from super or early access to super for those hit by COVID-19 and going through financial hardship. Now, I would highly recommend you speak to us or seek financial advice before accessing your super early, because it can have a significant long-term impact on your superannuation balance. So it's really important to consider all your options and only use that really as a last resort. Now, lastly, I want to talk to you about salary sacrificing and give you a bit of a top tip. So if you're in a position where you're looking to grow your superannuation balance this financial year, I would highly recommend exploring the option of salary sacrificing to super. Now, of course, the other way of doing this is what I spoke about before, making a personal contribution to super and claiming a tax deduction for this in your tax return. However, more often than not, I find clients struggling to actually put that significant lump sum into super, usually towards the end of the year, and they either end up putting in less or not making any contributions at all. Because life doesn't always go to plan, and when we think we have money down the track in future, more often than not, that's not the case. So it is way more effective and easier to contribute small amounts via a salary sacrifice arrangement, because it's happening automatically over time, so you don't notice it as much, and it's just a more disciplined way of doing it. And in my experience, it's way more effective than trying to be disciplined enough to put that lump sum in at the end of the year. So that's my top tip. If you'd like to know more about salary sacrificing, how it may apply to you or benefit you, I'm happy to discuss that, so do feel free to reach out. So I hope that's been helpful. I wish you all the best for the financial year. Let's just hope this COVID-19 situation gets under control sooner rather than later, and life will get back to normal. It's worrying times, tough times for some, but we'll get through this. Okay, take care. Speak to you soon.